I have so many questions.
There's so many things that are lining up for Europe to be able to do incredibly well. On the available statistics and benchmarks, we're doing better than the US.
Okay.
Which again, back to valuations and all that, makes a ton of sense. But we really have to remember that you can't necessarily deploy a US strategy in Europe.
Yeah.
What are the traits of Mark Zuckerberg, of Steve Jobs, of whoever? The traits are that they will run through walls, they'll make it happen, and they don't need your fucking help. And when I have questions, I'll ask you.
Okay.
The problem then becomes, what should the VC do as soon as they see there's problems? Should they try and kind of help them? Or should they say, obviously not an outlier founder, bye-bye? A lot of founders are chasing VC, but they're like, never gonna be a success. Most businesses can be built without venture capital. It's very rare to see companies go from India to Europe because the whole operating mode of an Indian company is to basically throw more people at a problem. You're like, I've got this super automated machine factory like that. You know, come to India and they're like, I could just...
We have 500 people here waiting.
Got 500 guys there. Like, they cost 5 cents an hour.
Yeah. How should a founder then, I don't know, maybe choose the right investor in Europe?
Don't we need more innovation? Don't we need more capital here? Yes, we do, but we need it allocated to the right people.
To the right, yeah.
Because if you have a bad allocator giving money to a bad actor, which then gives money to a bad founder, you end up with, what venture capital is, a power law game. When you have this weird dynamic where money comes from non-sophisticated players into the VCs, you end up with many that will not perform, and then you end up with founders being told, we're gonna build a huge ice cream shop business, it's gonna be great. And like, well, could you maybe end up just like all the scooter businesses? Probably. You can't do that. I think what Eastern Europe should do more is the stuff that you do. Tell the stories, get it out there, tell the world how great it is. You don't necessarily have to dominate the US to be able to build a huge business.
Looking at Romania, if you would like make a SWOT analysis, like what strengths, what weaknesses, what opportunities, what threats do we have right now as a country here in Eastern Europe, how would you describe it? Hey guys, we were thinking to do something special this season again, and we partnered with our friends from How to Web, which is the biggest conference in Eastern Europe for founders and investors in startup. And we planned a couple of episodes here at the conference where we currently are. Sorry for maybe the improvised background and a bit of the loud environment, but we wanted to be here to talk with the high-level guests that they bring here. Thank you again, How to Web, for making this happen, and we invite you to listen to the coming episodes of the Startup Talks podcast. Andreas, thank you so much for joining us. It's a pleasure to have you, man. Every time I saw you on the scene doing something, it's like you were born there. So
goofing out, having fun.
Yeah, and I saw like such a few podcast hosts being a guest in another podcast, so I said, let's do this privilege to Andreas.
Thank you.
Because I also love your perspective on so many things.
I always love being on the other side because I get to experience kind of what I'm putting people through every single day. So I'm really excited about it.
I'll do my best.
Hit me with the hard ones. Okay,
so I will start with maybe a strange first questions, but then we'll go in something more maybe pragmatic. What truth do very few people agree with you on? So I know something that you believed about, startups, investments, LPs, whatever, that such a few people, also believed in and saw you like a contrarian, and turns out to be true or not.
So I literally wrote my event manager and said, Sophia, can I get on stage to talk about why people shouldn't take VC money? And she was like, yeah, maybe we could work on the angle a little bit, but yeah.
Okay.
So I very much believe that we've done everyone a huge disservice by hyping up VC as much as we have.
Okay.
I have a podcast that does nothing else, right? All day long we talk about how amazing VC is, but we talk about it inside a small ecosystem.
Okay.
Where it belongs.
Exactly.
Because 99% of founders should not be raising VC.
Wow.
Because maybe not, I'm saying 99, but a lot of founders. A lot of founders are chasing VC, but they're like, it's never going to be a success. If you're going to get funded with this idea, it's because someone's stupid as fuck. You don't get the game. Because VC is a power law business. Most businesses can be built without venture capital. Most businesses should be built without venture capital. So if you go and pursue VC in like when you're running down a dark alley, it's like never going to be a great success. And that's why, as an example, I have built a business, which is EUVC, which is a lifestyle business. Flat out, I'm never going to take external capital because I'm never going to return anyone a dime. Anything I make extra, I want to put in my own bag, right? But I don't want anyone pushing me. I don't want anyone saying, Andreas, now that you've gone on that self-development retreat where you dive deep, did a lot of yoga and come back and really want to realign yourself with your wife and your real mission here in life, I don't want someone saying, you can't do that because you promised me a 5X, which, and I'm maybe a conscientious person, but if you take people's money, that's kind of the agreement that you go down along. And for that reason, like, you can't do that. And I think that life is better if you allow yourself to be able to do that. And if you then raise the venture capital's money, you're on a rocket ship and you gotta just ride it until it's either gonna burst up in flames or you're gonna go to the moon. And that is where I think that most people are really pursuing a pipe dream, so to say. They should just build their own thing. It's also why I always say, and in my presentation for this, I'm going to have a bunch of data on, as example, the power law curve, right? Like, who in their right mind would take their life's work and put in a portfolio where you know that one of them is going to be as successful as you hope? Then you're going to have a couple that are going to do so-so, and the rest is going to be dead. And the VC guy says, we'll help, but really helping is about just telling you in good time that, okay, expectation management, maybe this isn't going to be as great. Like, do you want to just maybe figure something out? Like, that's not a journey for most people. Why would you put your eggs in that basket? Like, this guy's fucking throwing around apples, right? And you're like, I'm going to take my most cherished apple, I'm going to put it in his basket and let him throw it. Like, probably not the best idea for most people.
I have so many questions starting from this, but let's see how we can cover as much as possible. So, isn't that counterintuitive? Europe is at a stage where we are kind of lagging in innovation and startups behind, US, Asia, and so on, sort of. But if we want to catch up, shouldn't the more VC path be the right?
Yeah, absolutely. So this is an intricate system.
Okay.
With many bad players. You have venture funds are backed by limited partners. Limited partners are pension funds, sovereign funds, insurance.
What's the role of an LP, just so everyone knows what we are talking about?
Yes, LPs, limited partners. Those are the super rich guys, the people that either are personally wealthy or managing money for others. Those are the ones that give their money to venture capital. Then my VCs are putting money into the startups and founders. The problem is that if you don't have sophisticated LPs, you get a bad set of VCs as well.
What does sophisticated LP mean?
That means LPs that really understand what venture is and know how to pick a good one. And we don't have a lot of those in Europe, unfortunately. Which means I always say that you can almost draw like a chart where you have successfulness in fundraising on the one axis, and then on the horizontal you have all the way to the left you have the VC or the founder network of the VC, and on the right hand side you have the LP network of the VC. So when they start raising their fund, right? And you can almost draw a cross in it, and you can say the people with a great LP network often don't have a great VC, founder network, and the opposite, right? But then you have the success up there, which says if you've got a great LP network, you're going to be able to raise, which means we have a lot of private equity guys being able to raise, or we have a lot of law guys who have a bunch of other law guys who kind of looks
financial
cool.
guys and
exactly. There is a beautiful sweet spot. Those are the managers we back a lot. which is people that are born in the tech ecosystem, because they will then have been around huge successes in tech, which means they're already backed by unicorn founders and other VCs and angels in the ecosystem.
And they know the game.
And at the same time, they're building in the tech ecosystem and have been for so long that they are the beautiful thing that has both. But not the majority, like I need to watch my language here, but many VCs, no, we always come to tech conferences like How to Web here and think that the ecosystem is great and venture is so cool and full of awesome people. It is, if you come to the right places.
Yes.
Bogdan has built an amazing conference where every single year, the majority of the VCs that come here are people he has invited. They're invited to come and speak, either this year or last year, and then they catch the vibe, realize it's cool, and they come back again. So here you get a good catered community. But if Bogdan said, let's grow the fuck out of How to Web, let's make it really big, he would have to say, okay, I gotta give an inch here, cut a heel there. And then all of a sudden, he dilutes the conference's value in terms of real value for the people that are there. He can make a more profitable business, but he will have invited a bunch of VCs that are no longer great. But here, we have a great quality of VCs, so if you go to How to Web, you got to meet a lot of good apples, so to say. But the fact of the matter is, I don't know the Romanian market as I know the Danish one, but there's clearly 3-4 really great VCs in Denmark. But if you look up number of VCs in Denmark, you get like 50. We've got more than 5,000 VCs in Europe. I have had 350 on my podcast.
Wow.
Most people would think, well, aren't you kind of saturated now? Haven't you covered it all? That's because we're in this small hype bubble of inside ventures where we all know each other. But the majority of VCs are kind of peripheral VCs that are not in this bubble, and obviously not on my podcast either, right? So going back to your question, don't we need more innovation? Don't we need more capital here? Yes, we do, but we need it allocated to the right people.
To the right,
Because if you have a bad allocator giving money to a bad actor, which then gives money to a bad founder, you end up with, what venture capital is, a power law game. Because even on the VC level, meaning when an LP invests into a VC fund, she will have similar return profiles as within the VC's portfolio, meaning that a few VCs will be the bulk of the return, a few will give okay returns, 2 to 3x, that's what you want from a VC fund, but you also have a pretty long line of funds that don't give you much. And I think that you don't see it in the same way as starkly when you look at a fund-of-fund portfolio of someone who knows how to manage their shit. Because they actually know how to pick. They're specialists in this. They know what a good VC is. But when you have this weird dynamic where money comes from non-sophisticated players into the VCs, you end up with many that will not perform, and you end up with founders being told, we're going to build a huge ice cream shop business. It's going to be great. Like, well, could you maybe end up just like all the scooter businesses? Probably. But
do you think that the market will, get rid of this and heal itself, or does it need external?
There will always be demand for a high-performing asset. Venture capital is a high-performing asset. There will always be this dynamic of some people being good fundraisers, which will allow them to continue to raise their funds, which is also why you haven't gotten rid of it in the US, right? It's better in the US.
Yes.
Because it's a more mature ecosystem. But then in the US, which is also a bit what explains, how can a startup that seed level in Europe be, 2 million on a 10 million post, right? Or pre or whatever, right? Whereas in the exact same startup in the US would have been 5 million on 50. Like, how can they then end up having a similar return profile? That can only be because there's something that happens along the way that really fucks things up, right? Because otherwise, if you factor in the dilution game on every single dollar that's invested, you should have radically poorer performance in a place where everything is 10x as expensive. It's not 10x, but 3x, 4x.
Yeah. How should a founder then, I don't know, maybe choose the right investor in Europe? What they should look at? Maybe some red flags that.
Yeah. So the really big red flag. So let me try and explain how venture works. I always say venture is like high school. It's literally like high school. You've got the pretty girls. Everyone wants to be with the pretty girls. You've got the hot guys with the big muscles and the car. Everyone wants to be with those guys. That is what venture is like, because we're super herd behavior. Everyone follows the best. But then you can do the reverse math on that as a founder and say, well, wait a second, if this guy is not amongst the best, well, is he then one of the best and just no one has really noticed yet? Probably not, right? So again, let's go back to Bogdan. I love Bogdan. Bogdan puts this show on, right? This guy, does he ever invest without having big dudes with him? Not really, right? Either they're following him very closely because they don't want to come in as early as he does, so they'll look over his shoulder, or they'll be co-investing, or they will have invested in his fund, or they will notice that whenever he puts something up on LinkedIn, those guys are liking it, or they're commenting, or he's on a podcast where he's talking to those guys as well. Like, if there's nothing with the VC you're looking at or the angel that you're looking at that is telling you that this guy is in those networks, in a networked industry, probably not. Probably because he's not that cool. And in the end, and so why am I talking about it being important to be cool and all that stupid shit? It's because venture is about getting on a train down here and then going in 18 months, raise a 3x valuation, in 18 months, raise 3x valuation, blah, blah, blah. So you end up in a huge outcome. If you want to do that, that's why we talk about traction and building momentum all the time. If you want to do that, well, every single time it's jump from one network to another network to another network. It's nothing else than jumping from network to network. And for that reason, that's why you can basically diligence a VC on their network 90%. Because then there's enigmas. There's people that do an incredible job from the back of their, home office. No one ever sees them.
They are not aware that they are good at the game.
No, I do. I actually think they are aware, but they're just killers. So, and these are typically specialists. So, they might be like the best guy in quantum. Probably won't run around at a conference because he doesn't need that, and he's a natural introvert. And if he doesn't need it to source the best deals because he knows what the best tech is, he knows all the best professors, he knows all the best CTOs and developers in different companies. He's like, well, I don't need to go to How to Web and do all the stuff that I don't like because I don't like being around people, basically. At least not in this type of situation. So for that reason, I'm staying out of that game. Okay, those two exist, but big red flag, extrovert VC, not in those networks. Okay, then you've got a fuck up on your hands.
So if you would put I don't know, the focus on the one thing why founders, because more and more founders, the good founders, are directly just jumping into the US, looking for the US investors, Y Combinator, everything, and so on and so forth.
It's pretty obvious, right? I said it just before, you can get a higher price. If you're a great founder, valuation is the price of your company, right? I right now have an asset, I think it's worth 10 million. If I sell it here, it might be worth 10 million. But, okay, I am only selling 5% of my asset. Here I can sell it for 10 million. Then I go to the US, I can sell it for 50 or 20 or whatever. And then there's all the ecosystem dynamics of being in the US, which one can also argue are good. I would say that any founder going directly to the US without also meeting the best European VCs, they would be making a mistake.
Okay.
Because there's no great VC in Europe that doesn't say, I'm price disciplined, but I also know when something is too good to be price disciplined about. And that's why I say, you can raise on US valuations from a UK or Romanian. Bogdan, as an example, he knows when to take the rule book, throw it out the window and say, okay, Hail Mary, I'm doing this one. Because sometimes you got to do that.
Yeah. Yep. And you saw like a lot of ecosystem in Europe, all over the place, west, east, south, north. Do you think that do we have in Europe something similar to, I don't know, what Silicon Valley is for the US? Do we want to have something like that? Should we have something like that?
No, we have something different. And we are markedly different. And we always will be. Because Silicon Valley is defined by its extreme proximity for anything tech.
Yeah.
And we just do not have that.
Yep.
You have many smaller hubs. London is a hub, Berlin is a hub, Paris is a hub,
Barcelona,
Bucharest is. Then you have specific hubs, around specific verticals. In Denmark, I'm helping a group that's really trying to build up the robotics hub, which is all good and great. But we just need to realize and come to terms with that Europe is a fragmented market, and we need to build for that, which is why I think my podcast is so important, because I'm saying Europe first. I've never ever cared about, are you from Berlin, are you from Paris, are you from London, are you from Romania, are you from Italy? Like that has never ever been my framework. It's been whether this network of great VCs, where are you in that network? And obviously, I also make picks where, okay, these ones are a bit outside of it, but I really think they're great and they're coming in, and I want to support, right? So we will always be different in Europe, and for that reason, we'll also have different dynamics. We also have a different exit environment, which means that the returns the returns profile of a European VC's portfolio is a bit different from the US, because we have fewer humongous outliers, decacorns. We don't have that many of that in Europe. But then we have many more concentrated strategies. Yeah. But we don't have many 500 million euro funds. Like count that on maybe two hands. In seed, you can count it on one hand. Whereas in the US, they're everywhere.
Yeah.
So for that reason, return profile for venture capital as an asset class is great in Europe. It's actually on the available statistics and benchmarks, we're doing better than the US.
Okay.
Performance of European venture capital is better than US venture capital, which again, back to valuations and all that, makes a ton of sense. But we really have to remember that you can't necessarily deploy a US strategy in Europe.
Yeah.
So will we ever be as strong as the US? Well, we already are from a returns profile, which as an LP is what I care about.
Exactly.
Will we ever have as large tech successes? Will probably be a long while, especially because you have this dynamic already of people jumping the pond when they get big, because they get a lot of US capital in, because they want to go on the largest stock exchange, which...
And the huge market, which is unified.
Well, yes, that is the one thing that it's beautiful and it's amazing that, okay, 350 million, one market, I love it. Yes, but there are also incredible competitive dynamics. There's so many things that actually, I think it's more about the capital market and the ecosystem in the US than it's necessarily getting to that market.
Yep.
Because you can build a huge business with the European, customers or the Asian and the rest of the world. You don't necessarily have to dominate the US to be able to build a huge business. But yes, obviously it's incredibly alluring that, okay, there's that much capital and customers there.
Should we also look a bit more also on the east, towards Middle East, Asia, as both VCs and founders? Because I every time you talk with a founder or an investor, everyone is like you looking into the West. I don't know if they are from Eastern Europe, they look to, I don't know, Germany, London, so on and so forth, and US. So is there an opportunity now with Europe being closer, at least geographically, to Middle East and then also Asia?
I'm about to say no, go west is go right. It's a difficult one. Each business will have their own reasons to go to the east. So
have you seen any
if you're building,
successful
as an
ones?
example, if you're building something tech intensive,
Okay.
you'll very often want to go east with your tech team. Can make a ton of sense, even if you're in London, because tech talent is more available here. It's cheaper, which is good. And for that reason, you can definitely look at any company and say, okay, there's good reasons to go to the east. When I'm talking a lot and when founders are thinking a lot about going west, it's because the capital is more readily available there. And again, back to the valuations and all that, where I would say that we, are seeing the beginning of it, is that all VCs are going east to raise capital today, right?
Yes.
But that's a special dynamic, right? Because in the Middle East, they've got
A lot of money.
a lot of capital from oil, right? And they're transitioning their economy, so they're doing a ton. Then there are specific dynamics around anyone in Western Europe that can effectively do stuff with Eastern Europe as well. That can make a lot of sense as well. But then, as an example, many would think that, well, why don't we outsource to India or do something like that? Well, you have a huge time zone difference, which can be a drag, very hard operationally, super hard, taxing on the whole company because you have to coordinate across large time zones. That can be difficult. And then you have in India, and I'm obviously, exaggerating here or simplifying here, but in India you do have a strong inclination to throw people at a problem because they've been able to.
Yeah.
Which means when I had Sumer Juneja from Tiger Global on the podcast, sorry, not Tiger Global. What's his fund? The Vision Fund.
Draper guys?
No. It's gone right now. Sometimes something I know perfectly well is just absolutely gone. Anyone that knows about VC will know what I'm talking about when I say the Vision Fund. So he described it very well. It's very rare to see companies go from India to Europe because the whole operating mode of an Indian company is to basically throw more people at a problem than is viable in Europe.
Yeah.
So everything you've learned in India, you can't really do here.
It doesn't work in Europe.
And then it's kind of the same thing. You're like, I've got this super automated machine factory, like blah, come to India, and then they're like, I could just.
We have 500 people here waiting.
Got 500 guys there. Like, they cost 5 cents an hour.
Yeah.
What's the deal?
Yeah.
So for that reason, I think going east past Europe is harder. But every single startup will have their own reasons and their own way to do it. You often see it with acquisitions as an example, right? In Middle East, one of the leading companies in food delivery and ride sharing was acquired by Uber, right?
Yeah.
Okay, that's a way then to say, okay, completely different operating models.
Yeah.
But it lives well on a corporate plane. But as a startup, it's harder. You need to be quite large before it makes sense.
Yeah. How do we bring more capital in Eastern Europe? Because a lot of the European, for example, the EUVC or the other big investors, LPs in Europe are investing, the big majority in Western Europe and also with the mentality for the Western Europe, even in Eastern Europe. How can we maybe change that? How can we attract more capital in the Eastern Europe?
Yeah. So you said the EIF there, which is just one thing I'd caveat, which is I don't think that EIF would not have that.
Okay.
Because They have mandates for each country. They actually have, at least in comparison to the ecosystem and the size of the ecosystem, their mandate for Eastern Europe is bigger than it is for Western Europe.
Okay.
Because they have a
But at least I see
ecosystem. They have an ecosystem
Yeah.
development role.
Yeah.
So that's why they're born with that.
Yeah.
When you're looking at it from sophisticated LP's perspective outside of Eastern Europe, I've heard a great point, which is that there's a lot of Eastern European companies that are domiciled outside of the region, which means that when a top-down investor sits in the ivory tower in London or wherever and looks at Eastern Europe and the numbers on Eastern Europe without being here, or without knowing a lot about this place, these companies that have been domiciled in Delaware or in London or wherever, where it's considered more kosher for the later stage investors to come in, so you're like, might as well put it there from the beginning. It's kind of made simple, the reason why people do it, right? You also remove red tape, so you have problems in many countries in Europe that you've got the legal works, in the local language, and then someone large comes in and looks at your company from the US and they're like, what the fuck is this? I don't understand what that says. I'm not signing that. I'm not spending time looking at that. So it can be a hindrance. So for that reason, sometimes you choose to domicile your startup outside of Eastern Europe. But then that has the unlucky effect that the numbers that many spreadsheet investors look at actually end up being wrong, because the companies, factor as a Delaware company and not as a Bucharest company. And that's of course unfortunate. I also think that you're only experiencing, an extenuated effect of what all of VCs experiencing, which is that for most capital allocators, venture capital is a super small bucket. There's rarely anyone that has more than 5% in venture capital of their whole
portfolio.
Yes, or net worth, right? And for that reason, they can't spend much time here. And that then means, if you're sitting in London, am I going to fly to Bucharest? And we're going to try and, again, back to a network industry, and we're going to try to figure out how good this manager is by asking a bunch of people I don't know, but knows him. So they'll actually say, yeah, Bogdan is a cool guy. I want to go to How to Web for free next year, so Bogdan is a cool guy. That's really what's going on. So for that reason, it can be, it's only extenuated, this fact that VC is super small, and when there's then another, layer on top of it, which is distance, which is lack of networks there, which is lack of understanding, it only gets worse. And then I don't think the whole Ukraine situation makes it easier for anyone. Really, I think that anyone here in Bucharest would say, Ukraine? What? I'm not really feeling that. Okay, we have more refugees, but that doesn't really affect my company. But for someone in London, they don't necessarily have that nuance, in the US less so, right? So that is definitely not helping either. I think what Eastern Europe should do more is the stuff that you do. Tell the stories. Get it out there. Tell the world how great it is. We try and do that on the podcast as well. I think I wouldn't say that we over-index on Eastern Europe, but we definitely do compared to other media. But that's also because I try and just...
You're here right now.
I want to do shit with the cool guys, and the cool guys sometimes are in Bucharest.
Do you think that, I don't know, is all this money poured right now in Romania, for example, through these ADRs and having the Northwest region or the West region, having all these public-private funds? How do you see that compared to, I don't know, just private money or VCs that have more...
Public actors are made to skew the system. But they are, right? They're made to try and bring about a change that we want to happen. when you use public money for that in venture capital, you're automatically saying we're going in backing something that whatever barrier the private market has to back something isn't crossed. So you're automatically coming in and saying, okay, either you say we will ourselves fund this, or we will match it 2-to-1 or 1-to-1, whatever is kind of the rule.
Yeah.
But as a public entity, you're made to do that. So automatically you will end up with a system that's skewed, towards lower performance, so to say. On a society level, that can be incredibly important and incredibly powerful. We would not have had European venture without EIF.
Yep.
We would not have had the Romanian ecosystem without the EIF and EDR.
Yeah.
We then have some incredibly strong funds that manage to raise only with private capital, which is typically an expression of how powerful they are. It can also be because they say, no, we don't want to go through that, it's very difficult. We would rather just do pure private, that way we're free. That way we don't have, because typically they come with different requirements. We don't want all that, so for that reason, and we can raise our fund without it, so we'll do that. That is not to say that because very big tier 1 funds in Europe have taken hundreds of millions of euros from the EIF. So it's not to say that the fact that you have EIF means that you're less good. Not at all. Not at all. But you can argue that a fund that has been able to raise entirely without public money is very, very strong. That's
what
for
does
sure.
that mean for founders, for example? This difference does it mean anything?
No, I wouldn't say it means anything.
Okay.
What it means is that you need to be a little more aware of the VC that you might take money from.
Okay.
Because if you're in an ecosystem that's heavily subsidized, there's a bigger risk that you take on money from someone who the pure private market would have weeded out. But again, it's a dangerous thing to say. Okay. You also have, I think the Romanian program is pretty good. Okay. I don't think that there's that heavy handed mandates from either the EIF or the other. There are other ecosystems where there's been very heavy and rightfully so critique of how these programs have been structured, which means that they've had requirements about X% of the staff, 70% of the staff must be in our country, which when a founder takes money from a VC that has that in their requirement to the underlying portfolio, can end up in weird situations where either the VC has to deal with a super bad situation, or the founders, or the VC, even worse, right? The VC pushes their problem onto the founders and says, you got to move here, or you can't. Everyone has to be employed by a consulting company here that then, and you end up in these weird workarounds. I think we're getting quite far in terms of weeding that out in Europe, but it's super important.
I see such a few, at least in Romania, but not just in Romania, I think in the region, from what this is my impression. Very few VCs involved for real in, for example, growing the startups, working with Accelerate. I mean, they come do a workshop and so on and so forth. Shouldn't they do more than just that?
This is the conundrum.
Okay.
The difficult one. Because the best... So what is a venture-backable founder? What are the traits of Mark Zuckerberg, of Steve Jobs, of whoever? The traits are that they will run through walls, they'll make it happen, and they don't need your fucking help. get out the way. I'll manage myself.
Okay.
And when I have questions, I'll ask you.
Okay.
That is the mentality of
Yes, but
the
they
outlier
were exactly they are the
founders.
outliers.
But this is the point. VC is an outlier game. So the problem then becomes, okay, VC is an outlier game. It's all about backing these guys. What should the VC do as soon as they see there's problems? Should they try and kind of help them? Or should they say, obviously not an outlier founder, bye-bye? Most VCs, primarily because sometimes they think we can salvage the company, we can still get 1x. This is again back to the portfolio model that runs through VC. In the US, they have massive outliers, which means that they have these companies that can make up for 99% of the portfolio just being there. We don't have that in Europe, so for that reason in Europe, we tend to have VCs that actually get more hands-on than the US. That tends to, especially in the tough times, try and salvage what can be salvaged. That means that they will also try and put in terms that are more restrictive or more downside protecting because it matters to them whether they get money back, which a US investor is more inclined to say, fuck it, that's a write-off.
And that's why the terms are more libertarians.
Yes, do whatever you want. I don't have time for that. I'll have another decacorn that makes up for the loss. We don't really have as much of that in Europe. So for that reason, our investors will typically try and say, I'd like to protect what's going on here. I'd like to at least make sure I get 1x, which is my money back. Or ideally 2x, something like that, right? And that then means that they step closer. What do they do in the boom times, in the up times when things are actually good? That's where most good VCs, I think, are quite honest about, I'm not really interfering and getting in the way. Look, Mr. Founder, look, Mrs. Founder, this is what I've got. I know a lot about architecture in the fintech markets. I know these people, and this is my LP base. For these three things, come to me. This is what I can help you with. Anything else than that, you can try, but I'm maybe not worth too much. Happy to help. I don't want a weekly report. I don't want a monthly report. I'd like a quarterly. Do whatever kind of the rest of the group wants, because that's probably also what I want. And then I'll check in, and you'll check in. Other than that, really just run with it. That is probably how most VCs, and this is then, obviously, this is the basis, right? So when we talk about workshops, well, don't put on a fucking workshop I don't need, right? That's how the great founder would think. When there's real trouble in paradise, that is when you then suddenly have everything change, right? And a great VC, of course, steps in and helps as much as they can. They have seen things, pattern recognition, as we call it, right? They've seen 30 other startups gone through that type of problem, which is why VC, as much as it's dominated by young people, because we're all into tech and like we're looking at the future, we're thinking about the future, we move on our feet and all that stuff. We're drawn to tech for those reasons. A senior VC, someone who's been around, who's seen stuff, can be very valuable because they get the best ones kind of, they say that we're not amplifiers, we are absorbers, we're shock absorbers. So when you're doing you, I'll let you do you. I'm not like, yeah, you're so good, yes, rock on. Like, you do you, I do me. Tell me when I need to help you. But when there's a shock, I'm there. That's when I come in and say, okay, I've got you. We'll settle this. Don't panic. Don't throw up. Don't don't think the world is going to burn down.
Has your back, but doesn't stay in your way.
Yeah, when you're doing good, they're like just letting you run. When things are then tough, they are right there by your side saying, I'm here, I've got you. We'll think through this. Shock absorbers is such a good, because there's so many shocks as a founder. And you think that no one has ever seen this. A senior VC has seen it before. He'll have seen everything before. And that's exactly what you will want your senior VC to really help you with.
Would you go as a founder to like maybe more an experienced VC, but who has a lot of companies in their portfolio, or to maybe someone that's just started since a couple of years and maybe has more time dedicated for each startup because the portfolio is smaller?
There's no VC that has more time than others. and I say that because we all have the same 24 hours.
Yeah.
Like you just set yourself up in different situations. I don't think it's based on portfolio size. I don't think it's based on, like, it's more about priorities and how your model is built and all that stuff. Where I think that I would make a very strong point is, I love Bogdan as an emerging manager. How old is Bogdan? 40 something? He's an emerging manager, first fund.
Yep.
He's great because everything he's been doing for the last 20 years has been, like, this is how I put it. You wanna, and being a founder, you're investing in the VC because you're putting your equity with that VC. That VC can really cause a lot of trouble for you, or they can help you realize your dream. Same thing as an LP. They can either give me no money back or they can give me a ton of money back. So a founder can do the exact same exercise. Take the VC, plot their life experiences, and what I always say is that you need to be able to draw a straight line through that into the strategy the VC is executing on today. And if you've been around for 3 years, done a couple of angel investments, I'd be surprised if you're better than someone who's been around for 15 years, who's done 100 angel investments. Like, that would really surprise me. Some people are enigmas. I think VC is a game of enigmas. Both on the founder level and on the VC level. That is what I look for. People that are like, when I sit with them, oh my fucking God. Most people, maybe less if your audience are younger founders and they haven't hired so many, but it works often quite well with wealthy people that wants to do LP investments. I say it can be quite hard to think of this as an exercise where you're diligencing a VC, because what is diligencing a VC? But in the end, you're hiring someone to invest on your behalf. So think of this as an executive hire for you. Would you want this guy to be your executive hire? If the answer isn't a fuck yes, no, then it's a no, because there's so many others out there. Founders don't have the same discretion in terms of having so many others, because that's an LP discretion, because money is money and everyone wants money. As a founder, you obviously sometimes have to say, I've got 6 weeks left, I'm taking this money and I'll solve it afterwards. That can be a situation as well.
Looking at Romania, if you would like make a SWOT analysis, like what strengths, what weaknesses, what opportunities, what threats do we have right now as a country here in Eastern Europe, how would you describe it?
I don't want to go into a big SWOT analysis because I'm honestly not at all capable of that. I would say that Romania is riding a wave of UiPath, which is incredibly strong and incredibly important. And that is also the opportunity, which means that UiPath and also some of the other huge successes you've had, Elrond also, flamed out a little bit in the end. But also people who have gone through that scale-up journey that are then either they got their money out and got rich, like Marius from UiPath, now leading the tech angels. Incredibly important to have those guys. They know so much. They've been there before. They have networks. Marius can call up anyone in almost any of the big funds, and they will pick up that phone, which means getting an investment from Marius means that you can access all the best ones. And these dynamics that happen around huge successes like UiPath can really, be defining moments for an industry or for a whole geo. And that, I think, is the huge opportunity that there is right now. in terms of threats, we all have it in Europe, right? I think that geopolitically we're at a very dangerous, unstable time.
That was one of the things that I wanted to like point us forward. How does an VC and an LP sees Romania because of this?
So
how hurtful it is.
I honestly think that a VC is less scared.
Okay.
Because I think a VC will say, shit hits the fan, we'll just move out of the country. We'll just take the tech talent, core tech talent of the startup
and move them.
And or they will. Like the startup will say, okay, this is my life dream. Am I going to stay in Romania with a war knocking on? No, I'm leaving, right? We saw that from Ukraine as well.
Yeah.
So a lot can be salvaged on that level. And that's because they feel they have agency on it, which makes them less afraid. As an LP, you're looking and saying, I'm going to give you this money today, and it's going to be 10 years until I see it back, right? And it's going to be invested over the next 7 years, maybe even 10 years. Am I comfortable? If I give you $1 million, then oftentimes 500K will be invested the first 4 years, and then the other 500K will be over the next 6 years, right? Am I comfortable putting $1 million with where the Romania is today? Or do I not really like the risk that I'm putting my money with a manager that doesn't know how to protect his resources, his underlying assets from an impending war? Or he says, fuck it, I'm staying, or whatever, right?
Yep.
Which makes it because you're one step removed as an LP, makes it harder for more LPs to make the bets.
Yep.
And I think that we're in a place of turmoil. All of Eastern Europe feels it more, but I'm very afraid that we could go into large-scale war in the Middle East as well. What happens? Like, I don't know if I want Trump or Kamala anymore, right? Because Trump is probably going to say, yeah, take it, like, draw a line in Ukraine, give it to Russia, hope that Putin stops, and then kind of say, okay, we lost, Ukraine lost some land, lost some people. We didn't lose any people in the U.S. We didn't lose any land. We're better off ending the war now, so that's what we'll do. Terrible, cynical perspective, rid of any compassion and so on. Also potentially dangerous in that it might drive Putin to, think that he can just continue his tour in Europe. But on the other hand, you have Kamala, which I think there's a bigger risk would step up the heat in Ukraine, which might then make the war expand. And that is what I'm afraid of, is the expansion of the war. And anyone who loves anyone in Ukraine, has a very difficult time thinking that you might want to give up and say, okay, we lost land, but it is what it is. We got to end this now. And I'm afraid of my own life, so I wouldn't say that. But it's super hard. It's super hard. I have many friends. There's a lot of investors that have relationships on both sides, both family and friends, and have invested in companies like on what's now both sides of and that is incredibly tough. There's no good way out of it, right?
Let's end on a more positive note. I mean, that's a realistic one. I don't want to just like.
Shall we end on Israel-Palestine?
Please don't. But where do you see the European landscape? I don't know. What are our strong points on a global level right now?
The number of, or the volume of seed rounds and number of seed rounds and Series A rounds happening in Europe is increasing. I think it's 3 times as fast as the US.
Wow.
Which means that when you hear the VC Twitter, fucktards, no. I like them, but it's really annoying. You hear them dissing Europe, saying, we don't work hard. We like nothing happens in Europe. All that bullshit that they're saying makes no sense. Not true at all. Don't listen to a word of it. I'm actively really trying to work against that agenda. I'm doing a summit in London next year to try and really reset the narrative on Europe. One that's not just going to be people in London that show up and kind of hang around, but one where we will create quality content that hopefully will go viral so that we can get the US guys to realize, wait a second, there is actually something there. Because they're painting a narrative that's completely wrong, not anything that's good for us. And we have more tech talent than them. AI, we are very, very strong in AI. We're very, very strong in hardware. Deep tech.
Med tech, everything.
Yes, there's so many things that are lining up for Europe to be able to do incredibly well.
And especially the impactful startups, I would say. Those solving those big problems.
That's the thing again, right? When you think a lot about impact investing, and climate investing, it's almost a place where I think that there's most deals being done that might not be so good because there's too many funds, because they're competing, so they're falling over each other around. Because I think that it's actually a quite saturated market. But in the US, they do, a lot of them do not like this, right? What the? And I think it's for sissies and all that stuff, right? It's not real VC. So I'm in two minds about how much I want to talk about impact. What I can say is I love the people that are doing it. I'm so aligned with them in everything around how we think about our work, how we think about what we want to bring about as a change in this world. So in that sense, I vibe super well with them. If I were to say one venture capital sector that I think is doing super well in Europe, it's not one that I would call out as its own, because I'd rather think of it as deep tech being applied. And that's because there's all these carbon capture platforms where I'm unsure about how much is this a financial play versus something that's super meaningful. But I also get that to effect change, we need to measure, we need to I think it's just narrative-wise, I would explain it from a different angle. I would just explain it from the tech talent, from the research institutions, from the founder grid, from the pioneering research being done, and then say, some of these are in climate, some of these are impact.
Andreas, thank you so much for joining us and joining this discussion.
Thanks for inviting me.
I wish you all the best with EUVC. Congrats for all the amazing things that you are doing there and promoting all the ecosystem in Europe. And can't wait to hear about the London Summit next year.
London Summit is the first time I talk public about it, so there's nothing out there that anyone can find.
Okay. When you have something, we'll link it. Awesome. Thank you so much, Andreas, again.
Thank you.